Hi, I'm Alex, one of the co-founders of TokenTax, a crypto tax software and accounting startup. Today, we're going to be talking about crypto tax loss harvesting, which is a strategy for lowering your capital gains. First, what is crypto tax loss harvesting? It's a pretty simple concept. You're taxed on your net capital gains. That means your cumulative gains minus your cumulative losses equals your taxable capital gains amount. Tax loss harvesting is when you strategically sell assets at a loss in order to lower your amount of taxable capital gains. For example, imagine Daniel has $50,000 of capital gains in a tax year. If he didn't sell anything at a loss that year, then he would have to pay taxes on those $50,000 of gains. However, if Daniel wanted to lower his tax bill, he could identify which assets he was holding at a loss and sell some or all of them to offset his gains. So if Daniel realized a $10,000 loss by selling Doge, he could subtract that from his $50,000 capital gain total and lower his taxable gains amount from $50,000 to $40,000. Next, keep in mind that only realized gains and losses affect your tax totals. And what does that mean? Realized assets are those that have been swapped, sold, or otherwise disposed of. Even if the value of your portfolio has plummeted, you haven't actually realized any loss if you're still holding the depreciated coins. Losses must be realized in an arm's length transaction. What does that mean? An arm's length transaction is one between two parties in which each person is acting in his or her own best interest. In other words, no party can feel pressured to make the agreement, and there can be no collusion. This can be a challenge in the crypto space, since sometimes traders are left holding worthless or near worthless coins. Next question. When is the best time to tax loss harvest? You can tax loss harvest at any time, but remember, you can only do it for the current tax year. All gains totals are locked in after December 31st. Most people tax loss harvest in December. Once traders have a good idea of what their capital gains totals will be, they can determine how much or how little they want to harvest based on their personal tax strategy. If you're doing your taxes in April 2023 and realize you're holding assets at a loss, it's too late for selling them to affect your 2022 taxes. Market dips are another good time for crypto tax loss harvesting, since larger losses can be realized. You may have heard of the wash sale rule, but does it apply to crypto? The wash sale rule says that traders cannot claim a tax loss on a security sold and reacquired within 30 days. This is designed to stop investors from artificially inflating their losses to offset their gains. If Becca sold 3,000 shares of a stock at a loss on December 30th, but then repurchased the same stock on January 2nd, she would be making a wash sale. Any loss she realized wouldn't be able to offset her gains for tax purposes. In the US, the wash sale rule currently only technically applies to securities, making its application to crypto a gray area. That said, at TokenTax, we don't recommend making crypto wash sales. There are safer ways to tax loss harvest, including selling an asset and then buying a correlated token after a 30-day period. Our last question is, how do I use TokenTax's tax loss harvesting dashboard? Crypto tax loss harvesting can be difficult because most traders have multiple wallets spread across different chains. This can make it hard to identify which tokens you're holding at a loss and how much that loss might be. If you're a TokenTax customer and have a premium plan or above, you can use our tax loss harvesting dashboard to make the process easier. From your app homepage, click Tax Dashboard in the upper left-hand corner and then select Tax Loss Harvesting. If you've linked or imported all of your data, then you'll see a running list of all of your tokens that are held at a loss, as well as your unrealized loss amount and other pertinent data. If you want a more in-depth guide to tax loss harvesting, please visit our links in the description below. We're also hard at work making more crypto tax videos, so like and subscribe to stay in the loop. Thanks.